Okay, hi, this is Suzanne Dawood. I'm a local real estate agent with Coldwell Banker in Boston, Massachusetts, and I love talking real estate. So today we have John Fabiani from Salem 5 Mortgage with 19 plus years experience. Thank you, John, for taking the time and answering some of the most questions that our clients been asking. So as we all know, the fast rising rents and expectations of rising mortgage rates has been the motivating factor for home buyers to make the move and buy either their first home or they refinance. So we are here with our expert answering one of the top 5 questions that our clients been asking. So John, thank you so much for joining us. The first question is, how much can I borrow?
So that's a question that I get asked by every single borrower that I deal with. It depends upon your income. And also what we need to factor into that is what your debt is as well, because it's called a debt to income ratio. So we take your gross income times 50%. And then from that, we would subtract any minimal monthly credit card payments you have, car loan payments, school loan payments, get an idea of what the real estate taxes are on the new property, add that into that, and also the condo fee or the homeowner's insurance. And if all that equals less than 50% of your income, you'd likely be able to get a loan. So I would have to know those factors in order to calculate the actual loan amount that you'd be approved for.
Great, thank you. Second question. I heard I need 20% down.
Right.
Is that correct?
Yeah, that's a big misconception, and I hear it repeated over and over again. The good news is you can get loans with as little as 3% down, 3.5% down, 5%, 10, 15, 20. I see an awful lot of people still doing loans with 5% down. So those are available. Obviously, when you do a less down payment, you have to have a good realtor like Suzanne to negotiate a stronger deal, because you may be competing with someone that's got 10 or 20% down, but those deals are still being made and they're still being solidified.
Absolutely, that's a great point. Yes. The third question. I have a bad credit. Can I get a loan?
Right. So a lot of people say that, oh, I don't know if I can get a loan, I have bad credit. And my first question is to them is, how do you know you have bad credit? And they might say, well, I looked on one of the credit sites. Well, any lender is going to actually look at your credit and look at all 3 service bureaus, Experian, Equifax, and TransUnion. Once we see what that number is, I have a really nice tool and methodology to help people increase their scores. And I have literally seen increases of 100 points within 2 weeks. So I can actually help you get a much better score by literally tweaking some of the things that you might have been paying a little bit less on an outstanding balance. If you paid a little bit more to bring that balance down, your credit score will go up, gets you into a much better rate and program threshold.
Oh, that's a great point. That's why people need to work with professionals. We are here to help them and navigate in each and way possible.
And let me interject, Suzanne, for just a second. And people often hesitate, and I always try to assert that it's better to get your credit looked at by a lender much sooner in the process rather than waiting. Because if we look at your credit report now, say at the beginning of April, because you're planning to look for properties in June and July, well, if we see that there are some detrimental things on your credit report, we might be able to fix those in the next 1, 2, or 3 weeks, so that in June, when you're actually ready to make an offer, your score might have gone up 30, 50, 80, or 100 points.
That's a great point, John, because especially in this market, it's very competitive market. You really need to have all your ducks in a row. You really have to be prepared to submit an offer. And that's a great point. Thank you, John. We have clients that they say, well, we want to wait to save more for down payment, then we're going to buy. What do you have to say for that?
Again, that goes back to, you don't need to save up for 20% down payment. I mean, if you have 3 or 5% down payment already, then, or you might be thinking that you're going to save that in a month or two, then I say get pre-approved now so that you can get out and get acclimated to the market. I think that's the most important thing, is getting out and looking at properties to see what things, what items, amenities on different houses or condos are appealing to you versus some that may not. So I would just say that. And also, if you have a family member or relative that's willing to give you some money towards the down payment, I'd probably talk to that family member or relative up front to get an idea of what they might give, and we can factor that into your down payment.
Great, thank you. So what information, I send the client to you, what information you need from my clients in order to get them approved? I'm gonna add one more question to that.
Yeah.
There are two different kinds of pre-approval, and that has been the decisive factor.
Right.
And can you cover that for me?
Yeah, let's talk about that first. So there are some, mostly brokers out there, that will do a pre-qualification, which, as Suzanne knows, and any person accepting your offer, they're going to look at that letter and see whether it says pre-approval or pre-qualified. Pre-qualified might simply mean that someone's just taken your information over the phone and said, what do you think your credit score is? Okay, I'll put together a pre-qualification based on that. A pre-approval, which is what I always do with my customers, is I actually obtain their W-2s, their pay stubs, their bank statements, and their tax returns, so that I have a very clear picture of the profile of the borrower, and I can get them accurately pre-approved, and then I can back it up. You know, if a listing agent calls me and says, hey, John, Suzanne just gave me this letter from her buyer. Did you run their credit? Did you look at their pay stubs? Did you look at the W-2s? And these are valid questions for them to ask. And when I can say confidently, yes, I have, and they're an A+ borrower, then that goes a long way with submitting the offer.
Especially in this competitive market. Again, I keep reiterating, it's super important to be prepared. So when you submit an offer, there is no ifs and buts. Last questions.
Yep.
Where do you see the interest rates going?
Well, they've been going up since November. And there's been a pretty good increase in the past 3 months. Nobody has a crystal ball. Nobody can tell you that, rates are definitely going to go up or definitely going to go down or stabilize. That being said, there's a lot of pretty nasty things going on right now globally, and those have an impact. So if we see things settling down, perhaps rates may stabilize or so, but you're looking in the middle fours right now, easily middle fours to
What a
high
difference
fours right now.
what a difference since last December.
Yeah, and I can't say, because I don't have a crystal ball. I don't really see rates going up to like 5.5%, but we're probably going to be in the 4.75 to the 5% range, I think, in the near future, meaning the next couple of months. What's going to happen in June, July, and August, I don't know. A lot of my customers will put a loan in today, and we'll just say, we're going to float the rate, meaning we submit the entire application, it goes to operations, we get everything going, and then I watch the rates and let my customers know where we are kind of on a daily basis. So if you're risk adverse, you just lock in the rate. If you're a little someone that might want to take a chance and watch and see what happens, then, and you're not closing until May or June, then we probably want to let's see what happens over the next 10 or 15 days and maybe make a decision then.
Those are all great information. Thank you, John, because with every 0.5% rise in the interest rates, buyer loses 50,000 at least of the buying power. Yeah. So let's say if you could afford $500,000 with a 0.5% interest rates, correct me if I'm wrong, you lose that 50,000 buying power if you want to keep your monthly payment in a certain amount. So if you have any further question, please contact Suzanne Davout at Coldwell Banker, SuzanneDavout.com. We love talking real estate all day long. And John, thanks again for your time. They were very informative, and we'll see you later.
Thank you very
much. Be safe, be well. Till later. Bye.